Gold dropped 17% during the Iran war, from all-time highs of 5,626 in January down to 4,647 by the end of March. During active military conflict in the Middle East, during oil at $90, during the Strait of Hormuz shutting down, during everything that's supposed to make gold go up. So what exactly happened? Well, the World Gold Council's own analysis says it directly. Deleveraging and liquidity dynamics, not fundamentals, led to the March sell-off. In other words, paper gold crashed, not physical gold. Well, Wall Street insiders were getting margin called and forced to liquidate. Buyers in China were paying 12% premiums above spot price just to get their hands on the real metal. Over 100 paper claims exist for every ounce of physical gold on Western exchanges. And that disconnect, paper versus physical, that is your buying signal. Josh Ward from Noble Gold is back to explain why this entry point is smart money. And that's what smart money has been waiting for. Josh, welcome back to the Next News Network.
Thank you, Gary. Great to be here as always.
Let's talk about this. This is really strange. Gold dropped 17% during the war. I just went through it, down to 4,600. War, chaos, uncertainty, everything that's supposed to make gold go up. A lot of our viewers are probably confused. What exactly happened? Can you break it down for us?
Yeah, I mean, what we saw was a kind of a deleveraging event in the paper markets. So it's not that a bunch of physical metals were sold in the open market. It was the paper contracts that were sold on the exchange that caused the price to fluctuate down rapidly. I mean, I've been in this business for almost 20 years, and I've never seen a decline. I mean, silver was down $40 in one day. In one day
That's
in
insane.
January, which is insane. So it's an absolute coordinated effort. I think from the banks and the powers that be, we saw a ton of positions that were liquidated at the very bottom of the crash. J.P. Morgan being one of them, they got out of their short positions in silver and went long. So it almost feels like someone kind of put their thumb on the scale for a minute here, Gary, and then took it off.
Yeah,
Is
well,
what
that's
it.
something that the global banking establishment would certainly have the power to do. A lot of our viewers are probably really confused. I mean, as we just said, the World Gold Council said it directly. You just said it, deleveraging led to the sell-off. So for our viewers who really don't speak Wall Street, what does it actually mean?
Essentially, gold is traded in the futures exchange, right? Paper gold, right? Not physical gold. It's not like tons of physical gold is being traded back and forth every day. There are certificates that are traded in gold, just like oil, just like soybeans, just like coffee, right? So the paper markets sold off unbelievably, and a lot of places have like certain positions where if gold goes from 53 to 5200, it sells, and then a lot of people have these different programs in their system, and it's just kind of a self-fulfilling prophecy where everything starts triggering a sell, and we saw this huge decline in a matter of hours.
So Noble Gold Investments is right there at the front of the line, watching the markets tumble. I mean, last time we were talking to you, it was like this, oh my goodness, look where gold is. And now where we're
Yeah.
talking, it's like, look where gold is now. And I mean, I've had conversations with people who are like, when gold was at that height, and they're like, damn, I should have got in,
Yeah.
and now this really seems like a buying opportunity for individuals who are concerned about the instability in the markets. They want something solid. So what are you seeing with respect to your customers? Are you seeing more
Yes.
people coming in right now because this is a real good opportunity?
Absolutely. I mean, a lot of people in the last year or so have been kind of sitting on the sidelines watching gold and silver skyrocket, right? I mean, if you were watching the silver and the gold market last year, silver was up almost 200%, gold doubled. There are a lot of people that were sitting on the sidelines waiting for a pullback to enter the market, right? And I think this is what we've seen. I mean, gold is already up $300 off of its low from a month or two ago. Silver has gone up $10 or $15 from its low from a month ago. And it seems like silver's chasing 100 now again, and gold's chasing 5,000. I mean, we're back to where we were a month ago after the coordinated downturn here.
Yeah, it's remarkable. I'm looking at this post that was just made on X, and this is literally just 35 minutes ago. Gold is showing strong bullish momentum as buyers take control. Momentum holds. Price will continue higher towards key resistance zones. This is literally just happening right now. People are recognizing this as a buying opportunity. But I want to ask you this because this is what blows my mind because paper gold crashing in New York, physical buyers in China, they're paying 12 to 13% premiums above spot on the
That's
Shanghai Gold
correct.
Exchange just to secure the real metal. Explain that disconnect. Why would anyone pay 12% premium if gold is supposedly crashing?
Yeah, well, it shows you how high the demand is in China. They are not basing it off the paper price. They want the physical. China, Russia, all of these countries are going away from holding paper gold into physical gold. Okay? And if you want to hold the physical, it carries a premium over that paper price. And the Chinese are willing to pay 12, 13%. It got all the way up to almost 17% during the
My
height of
goodness.
everything. I mean, they were sending, I heard reports of companies sending 747s full of silver and dropping it off in Shanghai because they can make an extra 15% on the metals, right? So if you got $100 million of gold or of silver, I should say, and you go drop it off in Shanghai and make an extra 15%, that's $15 million, right? It might cost you a half $1 million to fly there and you make $15 million overnight.
And they're flying 747s full of this stuff.
Full of silver, right? I mean, if you go from London to JFK or London to DFW, I was just on one of those flights. 9 out of 10 of those flights are full of gold and silver underneath the plane.
Are you serious?
So, oh, I'm dead serious. If you get off of a plane and you wait a half an hour and you see a bunch of guards pull up and you see a bunch of trucks and they're taking the cargo off the ships and there's a bunch of security, you can bet your bottom dollar that's tonnage of gold and silver entering this country.
And it's just coming in. People recognize it. They want the physical gold actually delivered. So, you know, what happens when paper holders try to convert to physical, like all at once?
There's not enough physical and the prices explode. Right, just like we saw in 1933. I mean, that's the reason why we
Oh
got off
yeah.
the gold standard to begin with. Right, we issued more gold and silver certificates than we had actual physical metals in the treasury, and other countries caught wind of this, and they redeemed their gold and silver, and all the gold and silver was leaving our country, and FDR had to close the gold window so all of the gold didn't leave our country. And
Yeah.
since there, and we had from 1776 to 1933, an ounce of gold was pegged at $20 an ounce. It didn't go up or down. It was set at $20 an ounce. Silver was set at a dollar an ounce for almost 200 years. In 1933, we let the dollar float. Then within a year, gold went from 20 to 35. Silver went up, and it's been a race to the bottom since. I mean, the U.S. dollar has lost over 99% of its purchasing power since then.
It's remarkable when you look at the history and, of course, the Federal Reserve creation, 1913, the gold window closing, during Nixon.
Mhm.
But I want to jump over to Turkey for a minute because we were just talking about Shanghai. They just sold 8 billion in gold to
Yeah.
defend the lira during the war, and some headlines made it sound like central banks are dumping gold. Recently, I read that UBS called it liquidity management, not a trend shift. Central banks still bought 27 tons in February during active war conditions. So what's the real story behind the central bank demand?
Well, they're in trouble, right? And one of the few assets that these places have left is their physical gold reserves. I mean, other countries have done this in the past, and it's never worked out well when they sold their gold. I mean, I think most famously was it France that sold their gold at $300 an ounce 20 years ago, something like that, at the absolute low, and it's gone up unbelievably since. I mean, all of these countries, they're basically, they're being foreclosed on, and they're selling their assets to prop up their system. Right. And one of the only few assets that they can go to, it's not Bitcoin, it's not real estate, it's gold.
So I want to ask you something else here because this is what scares me. It's the bigger picture. Gulf sovereign wealth. Okay, these
Yes.
funds are reportedly reviewing $5 trillion in U.S. assets. You're talking about assets. Now, the dollar's share of global reserves has dropped from 71 to 58. You know, we have BRICS nations now hold about 17.4% of global gold reserves. That's up since 2019. Is the petrodollar system the thing that's funded American deficits for the last 50? Is it cracking?
Oh, absolutely. I mean, it's basically since 1933, our dollar is backed by the might of our military. Okay, there's no difference between a $1 bill and a $100 bill. Right, 100 years ago, a $20 gold piece was an ounce of gold. Today, a $20 bill is a piece of paper. It costs the government the same to make a $1 bill as a $100 bill. Why do we accept that one is worth 100 times the other? There's no intrinsic value in money. So when you print money out of thin air and it's backed up by the petro, it's backed up by essentially oil and our military, it's a recipe for disaster. And we've been down this road for the last 50 years. And now we're starting to see that other countries are really not liking the situation how it is, right? It's where we print money out of thin air, we lend it to other countries, and we get their actual real goods, like we've done with China for the last 30 years.
You know, when you put it like that, in very simple terms, you know, it's just a piece of paper. You know, and I've been battling against the Federal Reserve for 20 years. I've staged protests outside of the branches in every Federal Reserve district. You know, worked to support the Ron Paul policies of old to push back against the Fed. And when the way you just said it, it really just rings so true. You know, it's a piece of paper and they just print a different number on it. And it's
That's it.
basically backed by bullets and blood. And that's really what's scary when you think about it. And but there is value when you convert it. And that's what you were just mentioning, is that the American government takes that money and moves it over and gets the real assets from it. And that's exactly what your customers do, is they have the opportunity to take their real paper, which has zero value. They pick up the phone,
Yes.
they call Noble Gold Investments, and then suddenly they have actual tangible value that doesn't, I mean, of course the value does change, but they actually have something that will never go to the value of paper, which is
That's correct.
remarkable how you just lay that out. Now I want to ask you, Gering and Russianwag, one of the world's most respected commodity research firms, it says that the move from $252 to $5,626 was a debasement trade. Phase one. They say phase two is the insolvency trade. When markets start pricing in whether governments can actually pay their debts, their quote, gold could probably double from here. What is your take on that thesis?
Yeah, I mean, I think that's probably conservative, right? I mean, every fiat currency that has ever existed since the beginning of time has gone to zero, Gary. And for your listeners, right? Zero. It goes to zero. And the average lifespan is about 50 to 60 years historically. Okay, so we're on borrowed time, right? 1971 was Bretton Woods, where we officially got off the gold and silver standard, and we're at 2026 now, right? So you guys can do the math. I mean, we're on borrowed time. Okay. And I think that there's going to come a time in my lifetime, in your lifetime, where the government's not going to be able to use the Federal Reserve note anymore, and we're going to switch to a new currency. And that currency has to be backed by gold and or silver. Right? That's the only way to keep the governments
Wait,
honest.
wait,
It's
wait,
the
wait,
only
wait, 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 wait. You just said that you believe, and you know we've had Colin on here who's made predictions in the past that have proven true, and now you're making a very strong prediction that at some point we are going to have a completely new currency that's backed by gold. I mean, we know about BRICS, we know about that trading block that's been created to push back against the hegemony of the U.S. dollar, but when you talk about a whole new currency, how does that even come about?
Well, just like we saw with what happened with the euro, right? With all these
Okay.
countries 20, 30 years ago with the euro, where they had 6 months or a year to convert their old currencies into the new currency. And then after that time limit, it goes to zero. It's gone. You can't use it anymore. So it's a rush for everybody to turn in their fiat money and convert it into another currency. And it's going to happen exactly like we saw with the euro.
Okay,
And we
so
might even see different states come. I mean, you might there. You know, I live in Texas here, so there might be a Texas state currency. right? There might be a Utah state currency that's backed by gold and silver.
You really think that this is going to get to a point where you have states creating their own currency again?
100%. 100%. No doubt in my mind, in our lifetime.
Because in my mind, I think in the opposite direction. I think global currency. There's always been talk of this, new world
Yes.
order and this globalist future where everyone is in a stateless society, and we're just swiping cards everywhere and it's cashless. Even from a biblical perspective, it's written like that. But that's where my mind goes. But you're going in the opposite direction. Help me kind of rectify that.
Sure. Well, I think there's going to be a time where the states that have been fiscally conservative and they have, surpluses are going to get tired of supporting states like Washington, like California, like New York, where we have these socialist governors and people running the states that don't know what the hell they're doing. And I think that the American people are just like what happened with the euro, right? I mean, it's literally the exact same thing happened with the euro, where there was a few states in before the euro that were making money, and there are a bunch of states that needed the money, and they combined them all together into this one conglomerate, right? And I think we're going to see the opposite of that. I think we're going to see Texas come out with its own currency. I
Wow.
mean, we're already seeing that with something called the gold back. So it's not something that's IRA approved or that we really work with because the technology is still kind of far out. But they're already states are already creating gold and silver currency. It's called gold backs. Your listeners can look them up. They're legal tender. You can use them to, I can pay my taxes. I'm going to do a video here soon where I'm going to walk into the state of Texas County Assessor's office and I'm going to try to pay my property taxes in gold. See if they accept it.
Okay. Okay, this is wild. I know we've done some stories on some of these gold backs before. We've seen legislation passing, which actually backs up what you're saying. But this is another question, because you talk about how these different states are all, some are just practically insolvent. I mean, look what happened in Minnesota with, from a minimal standpoint, we're looking at 19 billion in fraud through the Medicaid, Medicare programs, and what was uncovered by Nick Shirley, and then what was just recently uncovered by Nick Shirley again in California. And we're talking probably 250 billion in fraud there. The federal government's working right now with a massive fraud task force to investigate every single state. And I mean, my own state here in Illinois, I know it's on the list. Other states as well. So we're seeing all of this fraud and all of this federal money that's going to these states. So how do you think, with respect to the U.S. dollar going to these states and then the fraud occurring, and then how do you think that's going to affect, these individual states that decide to have goldbacks? Because it's clearly an imbalance. I mean, we're talking about billions and billions of dollars of fraud just evaporating, and that's U.S. dollars. So are you tracking with me here? You see what I'm trying to?
Yeah, no, I mean, I see it like this. I see the government is doing to us as the daycare centers are doing to the government, right? That's how I see it. I mean, it's that's why when you shine the light on it, nobody in these areas want to talk about it, because all that money is going back to them. Okay, the fraud is the number one problem that we have going on right now, and it's in the hundreds of billions. It's probably probably in the trillions of dollars.
Yeah.
And one and we this is describing our economy. We have a fake economy, right? That's built on fraud. This is all coming to a head, and this is exactly what I mean when I make these predictions here. I mean, this is exactly, you're going to see states like California and New York completely go under, and you're going to see states like Florida and Texas come up with their own currencies, with their own ways of life. They're going to get rid of property taxes. They're going to get rid of income taxes, and these third world states are going to turn into exactly that, right? And it's sad to see. I was born and raised in California. It's a beautiful state. I mean, I still have family there, but it's one of those places that it's a great place to visit. It's not a good place to live.
Yeah, I know
Right?
the feeling. I know the feeling here being in Illinois now. I'd have to ask you this though, before we go, because for our viewers who are watching right now, they just saw gold drop 17%. They're wondering if this is the entry point, and what exactly should they do? What would you advise?
Yeah, no, this is a gift, right? I mean, the gold at $5,000 is the new floor, and people have to realize that. I mean, just like when a couple years ago, $2,000 was the floor for gold, right? So $5,000 is the new floor for gold, and I think $100 is going to be the new floor for silver. So if you have the opportunity to enter this market with under $5,000 gold and under $100 silver, I think it's a great time, and not just to kind of dip your toes in. I think it's a good time to jump in
So how do they get
because
started? I mean, what do they do?
well, it's real simple. I mean, there's only two ways that you can buy physical gold and silver, and I want to make that distinction, right? We don't work with paper certificates or stocks or anything like that. And there's only two ways that we can help you. You can buy metals with cash for home delivery, and I deliver those metals to your door, or you can use your retirement account funds like an IRA or a 401k, and we can convert those tax and penalty free into a gold and silver IRA.
It's
That's it. I
remarkable.
mean, it's a lot. I talk to so many people every day that have no idea that they can even move their 401k or their IRA into gold and silver. Right? The whole system is set up so you're stuck in the stock market. Right? When you get a 401k, there's no gold option on your company's options for investing. Right? It's just being in cash where you get clobbered or having to take a gamble in the stock market.
So
So
how do,
if anyone
so
out,
so how does taking it from the out of the market as a in your 401k, your IRA, and then you actually hold it in tangibly? I mean, because right now when people have their IRAs or 401ks, it's like it's just on a balance sheet. It's paper.
yeah,
It's
yeah,
out of sight, out of mind. But suddenly now their 401k, they can actually hold it in their hand. So how does that that dynamic work, and why would somebody want to do that?
Well, right now the stock market's at an absolute all-time high. We have the dollars very high. We're in the middle of several wars. I would say probably soft wars, but wars nonetheless. I mean, now is about as good a time as any, I would say, right? I think personally that the dollar is poised for a major drawdown. I think the dollar is gonna tumble. I think oil is going to keep going. I think we're going to see oil $150 a barrel with what's going on, and it doesn't surprise me. I mean, I remember when we were doing videos talking about how an ounce of silver was like $80 or $90, and a barrel of crude oil was $50.
Mm-hmm.
And it was basically the first time in history where you can almost get 2 barrels of crude oil for 1 ounce of silver.
That's
Okay,
insane.
which is insane. I mean, I remember when crude oil was $120 a barrel and silver was 20 or $30 an ounce. So it just
Completely
shows
upside
you
down.
that completely upside down. And it just shows you that gold and silver are holding your purchasing power against everything, against all assets, right?
Wow.
It has never been cheaper to buy almost anything priced in gold. If you look at your home's value 5 years ago compared to how many ounces of gold it cost you to buy that house to today, your house is on average 50% cheaper than it was a few years ago. Priced in gold, priced in silver. But you have to hold your assets in the physical metals, right? You can't be in the stock market and capture those gains. You have to be in physical gold and silver. You have to be in the metals. You have to have some skin in the game. If you don't own 1 ounce of gold or silver and it's 2026, you're going to be in a very tight spot in the next 2 to 5 years.
You just gave me an interesting homework assignment. What you said was go back 5 years, price your home, and then look at how many ounces of gold that is, and then go today, look at the price of your home, and then look at how many ounces of gold that is. I'm gonna do that after this interview because
Yeah.
I'm really curious as to see what that spread looks like. Any final thoughts before we go?
Yeah, no, well, that's it. You should do that with everything, right? Whether it's a car, whether it's a house, anything. If you're not pricing it in gold, if you're not measuring it in real money, and you're doing it in dollars, it's always going to go up, right? That's why everybody right now they think they're getting rich in the stock market because their stocks are going up. No, all that is inflation, right? And at any time that can come crashing down. Okay,
Wow.
the big difference with gold and silver, right? Gold and silver, everything is cheaper if you in priced in gold and silver today from 5, 10, 15, 20 years ago. I mean, you're living a life of luxury being in gold and silver. I mean, I have a bunch of different hobbies, and priced in gold, every single one of those hobbies, everything is dirt cheap. Whether you look at watches, you look at antiques, you look at cars, you look at real estate, everything is getting cheaper by the day priced in metals and more expensive priced in the US dollar. So people need to figure out, hey, do I want to leave my hard-earned money in paper dollars that the government can print out of thin air? Or do I want to leave it in physical gold and silver that the government can't print, can't create, and can't inflate away?
Wow. Josh, thank you so much for joining us. And I want our viewers to know we'll have you back. We'll talk more about this. We'll get an update in a couple weeks and see where things are. Hopefully we can get this Iran war situation smoothed out and we can get the oil flowing again and we can get the markets kind of stabilized. But, I mean, clearly this is an opportunity right now for people to buy. So,
Absolutely.
Josh, thank you so much for joining us.
Thank you, Gary.
So, Patriots, let me tell you what you've just learned. Gold dropped 17% during the Iran war. And that's actually your buying signal. The World Gold Council said it directly. Deleveraging, not fundamentals. Paper gold crashed because Wall Street traders got margin called. Physical gold, buyers in China paid 12% premiums just to get real metal. 100 paper claims for every ounce of physical. Okay, make note of that. You see, Turkey sold $8 billion to defend the lira, liquidity management, not a trend shift. Central banks still bought 27 tons in February. Poland added 20 tons in a month. The petrodollar is cracking. Gulf SWFs reviewing $5 trillion in U.S. assets. BRICS accumulating gold. Dollar share of reserves down 58%. And the insolvency trade, phase 2, is still ahead. Gold could double from here. So if you want physical gold, not paper promises, go to nextnewsgold.com and get your free gold kit. The number on the screen also 877-646-5347. Patriots, paper crashed, physical didn't. Act accordingly.